Welcome back to Explain the Charts. Today, March 4th, 2025, we are analyzing USDJPY, taking a look at both the recent news and the chart data. Recent news indicates that the USDJPY has slumped to near 148.40, a fresh, almost 5-month low. The Federal Reserve is considering rate cuts in June. However, speculations are pointing to the Bank of Japan likely to raise rates again this year, creating more demand for the yen. With all that said, let's dive into the charts and see how this news is reflected. We'll start by looking at the daily chart to get a broader perspective on the overall trend. Looking at the one-day chart, we can see a lot of choppiness, which could be attributed to the mixed sentiments in the market. There are many large swings, which is a sign that the market is unsure what direction it's heading. Notice the large dip in mid-November of 2024, which is a key resistance level to keep an eye on around the 142 price level. There was also a very steep rise in December of 2024, which also implies heavy volatility, which can be risky to trade under. However, lately, the candles seem to be less extreme, a possible sign of consolidation and more predictable behavior. Let's zoom into the last few months to get a better idea of the current trend. Looking closer, from January 2025, we can observe a downtrend with some attempted recoveries. It appears there's support around the 149 level and resistance around the 151 level. The most recent activity indicates a sharp drop from around the 151 level to below 149, which could be attributed to investors betting on a stronger yen given speculation the BoJ may further hike rates. If the bearish trend continues, we could see it revisit the 142 support level, as the Fed is considering rate cuts, and more people believe it will happen soon. However, if the BoJ doesn't hike rates as aggressively as expected, we could see a bullish reversal back to 151, especially if the Fed remains hawkish. Now let's look at the hourly chart to see some more short-term details. Remember that the Japanese fiscal year ends around March 31st, so there's a chance of some more yen appreciation as companies repatriate earnings. Switching to the 1-hour chart, we can zoom in on the most recent activity. The last few days have been a sharp downtrend after hitting resistance at about 151. There looks to be some support around 149. If we break through that, we could see a test for 148. The 1-hour chart looks bearish in the short term, and it may be worth watching the market carefully. As of now, if you believe the bearish signal, consider an entry around the 149.2 range and look to exit around 148.7 to lock in profits. If the market goes up again, cut losses at 149.5. Of course, do your own research and make decisions accordingly. Overall, looking at the charts along with the recent news, it's difficult to say where the market will end up. There is a war going on between what the Fed is planning versus what the BoJ is planning. Political and economic instability will play a key role for USDJPY in 2025, according to FX Street Research. Key price levels to watch include the 151 resistance, the 149 support, and the 142 support level from November 2024. If the BoJ does move to raise rates again, this could signal short or medium-term demand for the yen and a bearish outlook. However, even refraining from cutting rates by the Fed may be enough to keep the dollar at an advantage over all currencies, especially if the world is slashing them. We give this bearish move a 60% chance, especially in March given the end of the fiscal year. Thanks for tuning in to Explain the Charts. Don't forget to like and subscribe.